Hello everyone, I am Jitin Makkar. I am the head of credit policy at ICRA Limited, and I'm here to talk about a research report that ICRA published on April 1st, 2025. And that research was all about the credit quality trends in India and the performance of ICRA-assigned ratings in FY25. And in that report, we've covered three broad themes. The first theme was about talking about how the upgrades, downgrades, defaults, and the severity of rating changes has been in the past 4-5 years. And specifically talking about the performance in FY25, we noticed that the upgrades continue to outnumber downgrades by a factor of 2x. And this remains a healthy credit ratio, as the common terminology that we use to define the number of upgrades divided by the number of downgrades. And the fact that the credit ratio has been healthy is not just an FY25 phenomenon. In fact, for the past 4 years, we have seen the credit ratio to be more than 2x in each of the past 4 fiscal years. What this means is that the credit quality of India Inc. Has been on a healthy footing. The profiles have been improving, and that has been the key contributing factor to the rating upgrades also. And again, the reason behind that is that across sectors, we see manufacturing, services, infrastructure, we've seen a trend towards deleveraging. So despite the fact that the past 5 years have been quite tumultuous in the sense that we've seen COVID and then post-COVID, the post-pandemic recovery period, we've seen geopolitical conflicts, we've seen supply chain disturbances, inflationary pressures, commodity price inflation, interest rate cycle moving first up and then down, and we've seen currency turmoil. In all this milieu, we've seen that because of this favorable trend towards deleveraging, the credit profiles have been by and large maintained. Companies have been able to withstand these pressures, and that has contributed to the rating upgrade momentum that has persisted for the past 4 years. In our portfolio, we also noticed that the number of defaults has been trending down. We saw just 6 defaults in FY25 out of a portfolio of almost 2,500 entities. Even the severity of rating changes has been trending down. Less than 1% of our rated portfolio saw rating changes by a degree of 3 or more notches in FY25. And these trends do suggest that across the corporate India, and of course, including the financial sector, we see that the credit pressures haven't been as high as they were in FY19 and FY20. So our report covers this aspect, covers some data points on this theme in the first section of the report. The second thing that we cover in that report is to talk about certain longer period trends across sectors. And we've picked up the period between 2019 until 2025. And we try to cover this period because this has been the period where a lot of development has happened across the world and in India. And how that has contributed to certain rating actions across various sectors is something that we've tried to look at. And we have tried to do some interesting groupings in this second section of the report. For example, we've grouped the aviation sector and the hospitality sector, two sectors which have been the biggest, which saw the biggest disruption in business growth during the COVID period. But since then, our analysis suggests that at least the hospitality sector has been reporting a net sales CAGR of almost 7% in the past 6 years. Aviation sector has been growing even faster. Profit growth, of course, also has recovered because of operating leverage benefits in these sectors. And in the hospitality sector particularly, the number of average number of notches of upgrades that we have seen is more than one notch. Across the portfolio, we've seen between 2019 and 2025, the portfolio ratings have moved up by one notch. That's a big deal. The other grouping that we have done is for the fertilizer and the oil and gas sector. And the reason we did that was that these two sectors, again, have seen a lot of turmoil in terms of profit margin volatility, inventory losses, yet the ratings haven't budged as much. And that's because of the fact that these two sectors are quite strategic in nature from the nation's standpoint, and the government linkages are quite strong. There is subsidy support available for the fertilizer sector. Ownership is there in the PSUs in these two sectors, and the government ownership has, of course, been a key mitigating factor for the credit profile of entities in these two sectors. We've also looked at the ferrous metal sector, the chemical sector, where again, we've seen a lot of price volatility, commodity price escalation in FY22, which had taken the steel prices to multi-year highs. That allowed ferrous metals players to report multi-year high profits, and they use those incremental profits to pare down their debt. and how that has impacted the ratings is something that is covered in the report. Likewise, in the chemical sector. So in this second section, where we chart these longer period trends, we try to bring in that perspective of financial history, rating history of entities in these sectors. And finally, in the third section of the report, we try to answer 3 top questions which we thought would be there in the market participants' mind, the investors' mind. The first question being, what's going to be the impact on the ongoing tariff tussle on export growth prospects for the Indian exporters? We've also covered the question of domestic urban demand, urban consumption demand. Whether FY26 looks more promising, can the slowdown or the subdued trend lines of urban consumption, can they reverse in FY26 or no? And the third question that we try to address in our research report is that we know that in the financial sector also there has been pressures on the asset quality, particularly in the unsecured loan segment. And we specifically cover the NBFC MFIs to give our view on how the return on managed assets and the credit costs, how those might shape up in FY26. So all in all, this is what the content of that report covers. And we would encourage you to go through that report in case you're interested in additional data points and insights on how credit has behaved since 2019 in India. So that's it. Thank you very much for listening in. That's all I had to say.